Welcome back to the deep dive. Today, we're getting into the numbers, really digging into the latest Q1 FY26 financial results for NTPC Green Energy Ltd, NGL. Our mission here is, well, to cut through all the financial jargon, find the key insights in these figures, and help you understand what it all actually means for the company and for you, our curious listener. Think of it as your quick guide to what's happening with a major player in India's renewable scene.
Exactly. And we've got some solid sources today. We're looking directly at NGL's unaudited results, both standalone and consolidated, for the quarter ending June 30th, 2025. Plus, we have the limited review report from their auditors, always good for some extra detail and specifics on how they've used their IPO funds. So it's a pretty comprehensive picture. And just a quick note for you listening, when we say crore, that's 10 million rupees.
Right. Good point. Okay, let's jump straight into the headlines. What's the top line story?
Yeah.
The total revenue from operations for Q1 FY26. On a standalone basis, the figure is 560.33 crore, and consolidated, which pulls in their subsidiaries and JVs, that number goes up to 680.21 crore.
Okay.
Now, looking at the trends, year on year, that's up from Q1 of FY25. Standalone was 544.37 crore back then. Consolidated 578.45 crore. So, steady growth there.
Right. A clear upward movement year on year.
And quarter on quarter comparing to Q4 FY25. Standalone saw a small bump from 548.64 crore. Consolidated had a more noticeable increase, up from 622.27 crore. So yeah, revenue seems to be moving in the right direction overall.
That revenue picture definitely looks positive. But let's switch over to the profit side now. For Q1 FY26, NGL's standalone profit after tax came in at 165.22 crore.
Okay.
And the consolidated profit for that same period was 220.48 crore.
Right now, this is where it gets really interesting, I think. Because while those profits are way up compared to last year,
yeah, significantly higher.
They jumped from about 131 crore standalone and 139 crore consolidated in Q1 FY25. So big jump year on year. But they're actually down compared to the last quarter, Q4 FY25. Back then, standalone profit was over 205 crore and consolidated was around 233 crore.
That's the key observation.
So revenues are stable or growing, but profit dipped quarter on quarter. Seems a bit counterintuitive, doesn't it? What's driving that?
It really is the core puzzle here, and the answer lies squarely in other income.
Ah, okay.
A really significant chunk of that other income is interest they earned on the IPO money they haven't used yet.
Right, the proceeds from the IPO.
Exactly. Specifically, in this quarter, Q1 FY26, that interest income was 61.42 crore. That's for both standalone and consolidated.
61 crore.
Now, here's the crucial bit. Compare that to Q4 of FY25. In the previous quarter, that same interest income line was much higher, 104.85 crore.
Wow, quite a difference.
A huge difference. And if you go back a full year to Q1 FY25, before the IPO funds were really in play, this interest income was basically zero, NIL.
Okay, that makes sense.
So this fluctuation, this drop in interest income from the unutilized IPO funds from Q4 to Q1, that largely explains why the overall profit dipped quarter on quarter, even with decent revenue. It's a temporary factor, you see, not tied directly to their main operation.
That really clarifies things. So for anyone needing a refresher, NGL had its big initial public offering, the IPO, back in the last financial year, FY24-25.
That's right.
They issued over 926 million new shares, raised a massive 1,000 crore, and the shares started trading on the NSE and BSE November 27, 2024.
And understanding how they're using or not using that money is really key right now. So after expenses, the net proceeds were about 9,946 crore. A big portion, 7,500 crore, was specifically set aside to invest in their main subsidiary, NTPC Renewable Energy Ltd, NTPC REL, mostly to pay down REL's borrowings.
Okay.
Now, as of the end of June 2025, they had used 4,150 crore of that for NTPC REL. That leaves 3,350 crore still sitting there, earmarked for REL, but unutilized.
Right, the unused portion.
Exactly. The rest of the money, about 2,446 crore, was for general corporate purposes, and that part has been fully used up.
Got it.
So it's that unutilized 3,350 crore currently parked in bank deposits that's generating the interest income we talked about, the other income.
So if you kind of mentally strip out that temporary IPO interest boost, what does it suggest about the underlying health of their core operations this quarter? It really helps you separate the main business from this, well, temporary financial padding.
Precisely. It gives you a clearer view of the operational performance itself.
Okay, moving beyond those headline profit and revenue figures, the report also offers some Interesting operational details. Looking at expenses, for example.
Mm.
Employee benefits costs went up a bit. Standalone, it was 22.03 crore this quarter versus about 18.20 crore in Q4.
A slight increase there.
But finance costs
Yeah.
and depreciation and amortization, those seem pretty stable quarter on quarter.
Yeah, relatively steady. But on the revenue side, again, something quite interesting is the growth in a newer income stream. Yeah, consultancy, project management, and supervision fees.
Mhm.
Standalone, that brought in 20 crore in Q1 FY26, and consolidated it was about 8.21 crore.
20 crore. Okay. How does that compare?
Well, that's the fascinating part. It's a massive jump from Q1 last year when it was only 1.40 crore.
Wow.
So it suggests they're successfully diversifying a bit, or maybe new service offerings are starting to really scale up and add meaningfully to the revenue mix. It's definitely one to watch.
Definitely. And speaking of things to watch, there was another detail that really jumped out, and it was actually flagged in the auditor's report, the Green Hydrogen Hub.
Ah, yes, the Green Hydrogen Hub. That's a very significant strategic move they're making. NGL has leased land in Andhra Pradesh for 33 years, specifically to develop this hub. For accounting, this land is treated as a right-of-use asset, or ROU asset.
Right, ROU asset.
Now, the auditors included what's called an emphasis of matter paragraph about this. For you listening, an emphasis of matter doesn't mean the accounts are wrong, but it flags something important the auditors think you should pay attention to.
Okay, so what did they emphasize?
They pointed out that the amortization, basically the accounting charge for using up the value of this ROU asset over time, has already started. It began back on February 19th, 2024, and amounted to 7.61 crore in this Q1 FY26. This cost is being put into capital work in progress, or CW.
CWP, right, where project costs accumulate before they're operational.
Exactly. But here's the crucial part the auditors highlighted. The detailed project plan for this green hydrogen hub is, and I quote, still under evaluation by the company.
Huh. So they're already accounting for the cost of using the land, even though the final plan for what they're building there isn't locked down yet.
That's precisely it.
What does that signal, you think?
Yeah.
Starting the accounting clock on such a big new venture like a green hydrogen hub while the plan is still being worked out?
Well, connecting it to the bigger picture. NGL's core is renewable power generation, right? They don't even break out solar versus wind as separate segments. But starting to amortize assets for a hydrogen hub before the final plan is set, it suggests, I think, a very strong conviction, maybe an urgency to get things moving, to claim ground in the green hydrogen space early on.
Like planting a flag, almost.
Sort of. It signals a serious long-term commitment, even if it means taking an accounting charge now for a project still taking shape. It's quite a forward-looking approach. Oh, and the auditors also mention, under other matters, the various subsidiaries and JVs included in the consolidated figures like NTPC REL, Indian Oil, NTPC Green Energy, and others. They noted that some financials from these entities were reviewed by different auditors, and some weren't reviewed at all for the interim period, but management considers these immaterial to the overall consolidated view. Just standard consolidation notes, really.
Right, standard procedure. But one very clear point, especially important for investors or anyone tracking the company closely.
Yeah.
The report explicitly states there was no deviation or variation in how they've used the IPO money so far.
Yes, that's listed clearly in Section B.
It confirms the funds spent align with what they said they'd use them for in the IPO documents. That's definitely a positive sign regarding transparency and capital discipline.
Absolutely. So if we pull it all together, what are the key takeaways for you? First, NGL is showing consistent year-on-year revenue growth. The core business seems steady. Second, that quarter-on-quarter profit dip. It's largely explained by the drop in that temporary interest income from the unutilized IPO funds. It masks the underlying operational trend a bit.
Right. Need to look past that number.
And third, strategically, they're making bold moves into future areas like green hydrogen, signaled by things like starting amortization on the hub land even while plans are still evolving.
So what does this all mean for you if you're watching India's energy transition and the whole green hydrogen story unfold? Well, here's a thought to leave you with. The fact that a major player like NTPC Green Energy is already accounting for assets related to a green hydrogen hub, even with the project plan officially under evaluation, really underscores their commitment. What might this somewhat unusual financial approach starting the clock early, so to speak, tell us about the sheer speed and perhaps the conviction driving the move into green hydrogen? And what could that imply for future investment, innovation, and maybe even competition in this emerging sector? Something to ponder as you think about where India's energy future is headed.